Hi, this is James at Westpac in London with the end of day report for Friday, August the 31st. Equity markets rallied right throughout the Northern Hemisphere session, at least in the lead up to the opening remarks that Fed Chairman Bernanke made at the Fed's summer symposium, annual symposium at Jackson Hole. But there was quite a range of data released today. In Europe, we saw a blip higher in the CPI. The annual pace rose for the first time this year from 2.4 to 2.6%, we think on the basis of higher energy prices. A separate report showed 11.3% unemployment in Euroland. That's the highest on record. And you probably know these figures, but they're worth reiterating. I mean, the range of unemployment is from as low as 5%, 5 to 7% in countries like the Benelux and Germany, to 25% in Spain. And youth unemployment, that's the unemployed between the ages of 15 and 25, it's 23% in France, 35% in Italy, and 53% in Spain. In other words, more than 1 in 2 of every young person who wants a job and looking for a job can't get one in Spain. And that compares to just 8% youth unemployment in Germany. They're pretty sobering figures. German retail sales, they fell 0.9% in July. Looking at an annual pace of decline in retail volumes in Germany of 1%, which is the second lowest pace, or second slowest pace that we've seen actually for the year so far. So a pretty soft retail report. In Canada, we had the second quarter GDP numbers there, 1.8% annualised growth, the same as in the first quarter. Slightly different composition though, with exports contributing less, inventories and business investment contributing more. In the US, it was consumer sentiment revised up from 73.6 to 74.3. We saw some factory surveys. The Chicago PMI drifted back from 53.7 to 53 in August. It's actually 4 months running now that it's been around the 52, 53 area, which is the weakest it's been over any 4-month period since the end of the recession in 2009. We had some figures on factory orders, the Milwaukee NAPM as well, but all pretty minor stuff compared to Bernanke. But in reality, he was a bit of a letdown. He didn't really say that much new. He discussed the benefits and costs of non-traditional monetary policy, which has basically been asset purchases, including or what we call quantitative easing. He noted the 3 headwinds that he thought were acting against the economy, which those being housing, fiscal policy, and Europe. He thought they were more relevant than there actually being structural problems in the US economy that would prevent an eventual recovery back to more normal paces of growth. He reiterated that the Fed will provide additional accommodation as needed to promote a stronger economic recovery and sustained improvement in labour market conditions in the context of price stability, which is exactly the same wording he used in the FOMC statement back in August. So he didn't rule anything in, he didn't rule anything out, he didn't really tell us anything new. Stock markets sold off initially on the headlines as they flashed through and then bounced back to where they were when he started speaking. And that's about it really for today in terms of the news. We've got plenty to look forward to next week, of course, with lots of Australian data coming up, GDP figures, RBA meeting, ECB meeting, the press conference from Draghi, Bank of England and so on. But that's all for next week. In terms of where markets are at heading into the close of this week, we've got the FTSE in London up 0.33%. The French market up 0.8%, the Germans up 1%, Spanish market up just over 2%, and the Italians up 1.5%. And the Dow in the US is up 0.75%. It's at, what's actually a 102-point gain. It's at 13,103. This is just coming up to 4 o'clock in London, so about a bit less than an hour to go of trading here, but the US market's still very much active. In commodity markets, Copper price is down 1/3%. This is post Bernanke. We've got gold up 2/3% at $1,667 an ounce, and oil prices up 1.3% at $95.85 a barrel. And the Aussie dollar, well, just prior to Bernanke, it was at 1.035. Just after he started speaking, it was 1.028, and now it's back at 1.034. So just like equity markets, the Aussie had a bit of a dip and a bounce as Bernanke's comments were absorbed. That's it for today. That's it for the week. That's it for August, and I'll be back next week.